Monday, the 9th of April. Welcome everyone to the global headquarters of Channels Television, Lagos, Nigeria's financial capital. I am boasting them. I hope we had a very great weekend. Spent most of last week in Abuja. Today, we're back home where money and finance actually reside. Let's get the show started. What's in the news? This morning, the Central Bank of Nigeria over the weekend rejigged the Board of Governors. The governor himself, Godwin Emefiele, reassigned some members of the board as new deputy governors resume, and that's what you find very tinkering with the Board of Governors as you find it there. So Dr. Joseph Nana, that came in about a year ago into the system and was in charge of financial system stability, what they call the FSS, is now been moved to the Economic Policy Directorate, and his position at the Central Bank as the deputy governor has now been taken by Aisha Ahmed, who joined the Central Bank just about a week or two ago. She's now in charge of the financial system stability. Of course, you remember Aisha Ahmed came in from the commercial banking part, and she's also an investment analyst, but she's now in charge of the FSS. So if you're looking at who's to ask questions as far as the financial system stability, you've got to ask Aisha Ahmed. Meantime, Edward Adamu is in the corporate services of the Central Bank as a deputy governor, while Adebayo Adelabu retains his position at the operations directorate of the Central Bank. What's on our calendar this week? The planned listing of Nigeria's green bond, as we talked much about last week, may not happen again this week. There's inside sources say that events scheduled for the 12th of April, that's on Thursday, may have been shifted due to some reasons. We have no new date yet when the green bond will be listed. But of course, we're expecting the stock exchange and the FMDQ to admit the federal government's Sukuk bond on Thursday, but the green bond will not be part of it, at least as at the weekend when we got words inside the system. Meantime, investors are waiting on the Nigerian Stock Exchange to respond to Owando's Nigeria's request for the lifting of the 6-month-old share price suspension. We'll just about a minute. We'll talk a little bit about. We'll show you on a chart from Stockman what has happened to the share price of Owando in recent years. And as we move on, we have the Nigeria's March inflation report. We're expecting the Statistics Office to give us that on Friday. Then we'll add that to our economic data for the week. Then we'll have a lot more to discuss on that as we move towards the weekend, then into a brand new week next week. Meantime, the outstanding earnings, fourth quarter, full year 2017, are still being expected from a number of banks and non-financial institutions that are listed on the stock exchange. A number of companies are requesting for an extension to meet this listing requirement or reporting requirements on the NSE. Some folks are asking questions why more companies are filing and giving notice for delayed reporting. Meantime, we have the countdown to the World Bank IMF annual and World Bank IMF annual meetings in Washington. That starts on 16th, Monday, next week. You need to keep an eye on that. We have boots on the ground from Channels Television covering that for you as always. And today, the debt office issued a notice of the April's savings bonds. The debt office will be offering two tenor papers, one April 18, 2020, that will be coming through at about 10.75%, and the 3-year of April 18, 2021 is being offered at 11.75%. That's on today through till Friday. Okay, let's get on to talk about Owando, and that's where we're putting that chart on the table for you. But let's just bring you up to speed. Owando last week wrote to the Nigerian Stock Exchange asking for the technical suspension on this share price to be lifted. And you can see there it's been a wobbling all the way since the year 2010. Over the last 8 years, Owando's share price has been in that black, what you call the candlesticks, that you can see a very sharp sharp drop in 2010 when Owando was trading at 132 naira per share, one of the biggest stocks by market cap, by valuation on this exchange. Then it went all the way down now to 5 naira 99 kobo. You want to take a scientific calculator and try to do the math there. Over the last 8 years, you can see Owando, but you can see the critical resistance level somewhere there with a sharp upward arrow around the year 2013, mid when that stock was around 9 naira 32 kobo, now found a final level since 2016 where that price has been base forming until the regulatory action on forensic audit came into the picture. And that's why the company is now asking the stock exchange to revisit this, as minority shareholders are being hurt by this prolonged technical suspension. That's what we spoke about last week, didn't we? Let's get a bit more, let's read more of the broader market tea leaves now with Romosele Aziba, who is one of the investment analysts from Afrinvest. And did I miss all of you last week?
Good morning, boss.
I missed the market in Lagos last week. I really do. I really do. I haven't really acclimatized to Abuja by any stretch of any imagination. Yes. So I'm more comfortable here at home with you folks. Let's start with Owando, with what we have in front of us. This is one stock that you can say Skyfall, isn't it? Did you watch that movie? It's James Bond. It's called Skyfall.
The James Bond movie. It was quite good, actually. And you can say it was a similar situation with Owando.
It's a Skyfall.
Falling from his highs about 132 naira, like you mentioned, down to about 5 naira 99 kobo. Since the technical suspension was placed on trading of the stock in the market. But regardless of this suspension, if you actually look at trading activities on the stock, we've seen that they're actually they're unfulfilled bids that are still there in the market. The only issue is that the price will not move regardless of whatever crossing there
From
is.
what you see on a daily basis,
so it seems there's still demand for
that's what my question is.
The demand for the stock is still there.
It's still high.
With investors putting bids in.
Some folks are interested in this company, whatever we say.
Well, so, you know, the thing is, since the imposition of the technical suspension, the stock didn't benefit from the massive rally that we saw in the market.
Late last year.
Parts of it could be tied to speculative trading in the market, with a lot of investors believing that once the suspension is lifted, we might see a rally in the price of the stock. And
some folks were interested in buying
the current demand that we're seeing.
When the technical suspension happens, who gets hurt the most?
Well, for investors who are in the stock, it might be difficult for them to exit. And for the fact that the price has been kept at that level and won't be allowed to go higher or trade lower, capital gains for investors will also suffer. As
Minority shareholders or majority shareholders? Who gets hurt the most?
Well, I mean, investors in general get hurt, but it's safe to say that both majority shareholders and minority shareholders will be wary of whatever situation, because the fact still remains that they've invested in the company, and nobody wants to see their investments go bad.
Yeah, this is not really good. Whether it's gone bad is another thing, but from the way it stands, this doesn't look good. 132 to 5 naira 99. If I just do a round of just a 6 naira per share, but again, in the marketplace, a kobo makes a lot of difference.
Definitely.
So it's 5 naira 99. Give us the broader market. I've been a little bit uncomfortable since we started the year, in particular since February, and I thought we will get out of all of that, but it looks like this negative sentiment is continuing into the month of April, even though it's still early days. Today is the 9th. We've got only about 5 trading days so far in the new month. So read the tea leaves for us. What is biting investors' appetite at the moment?
Yeah, so what we've seen in the market, we've seen since, like you mentioned, since the start of February and even down into early trades this month, we've seen some correction in the market. If you recall, following the launch of the investors and exporters FX window, we saw the massive rally in the market, doing over 40%, and this was even extended into January this year, where the market was up about 17%. But what we've noticed within that period between February and now is that a lot of investors have taken a step back to look at the market. We've seen a lot of profit taking in the market. And now drilling down into activities in the market, we know historically foreign investors have been the major participants in the market, doing over 50%. But what we've noticed was in January and February, we saw that trend sort of change. So we've seen domestic investors, we've seen some foreign investors pull out of the market, take profits, and we saw domestic investors now become the major players in the market. And we started to see some sort of corrections for some stocks that had reached an overvalued level. We've seen sustained profit taking in the market, and this is one of the reasons why we haven't seen the sort of rallies that we had last year in the market in recent weeks.
This is a little bit. I'm trying to explain it because this is the first time in recent history when you have earnings, in particular even from the big banks, and the market was almost neuter, and the all big earnings seem to just fizzle out without the market reacting significantly to them. February, March, even with the early birds, now we're down to just very few latecomers, or those who say, look, we want to report a little bit later because we'll have a few issues to deal with.
Yes, so given the improvements in the broader economy in 2017, expectations for companies' earnings was largely positive, and it's safe to say that this had already been factored into investors' valuation of the stocks, and this was the reason why we didn't see some sort of knee-jerk reaction to the results. Even despite the positive earnings that we saw from some companies, we saw some sort of negative reaction from investors. It was largely due to the fact that this had already been priced in earlier in trading activities.
So where do I see what's going to drive the market in second quarter as we move on? Is it the budget? Is it the ERGP? Is it the GDP numbers we're expecting at least between now and June if we have the statistics of it released? What's your outlook?
Yes, so macroeconomic indicators remain positive. They continue to point to strengthening of the domestic economy, which is good for the broader economy. We're expecting quarterly numbers to start to come in. We also have a positive outlook on this. And if you also consider the fact that we are seeing rates in the fixed income market start to decline, we believe that equities might become more attractive for investors in terms of opportunity for returns. And we believe this could also drive investors' interest in the equities market. Because looking at fundamentally looking at the stocks in the market, there are quite a number of them that are fundamentally sound and still present opportunity for investors to come in.
Okay. Let's leave it there for today. And of course, I'm sure we're just sharing this before we came on air that the Nigerian Stock Exchange has modified the 1 kobo share price, replacing it with a stopgap minimum price of 20 kobo for quoted equities. That's coming from Stockman. Twitter handle at Stockman Nigeria. Thank you, folks, for bringing us up to speed. We'll have time I'm sure you folks will have time to digest this, and we can talk about this later in the week, maybe on Wednesday.
Thank you.
We can look at that from AfroInvest. Let's take a very short break, gentlemen. When we come back, our viewers here and around the world, the banking sector came into sharp focus on what is Buhari's administration doing as far as industrialization, as well as restructuring Nigeria's debt position. That's what part of the panelists discussed on the new Nigerian economy at the African CEO Forum. This is the part 2 of that. It's coming next.